And this is good news for anybody concerned about the economy, not just some vote-seeking politicians. Case-Shiller out this morning, home prices report in June. First year-over-year rise since I believe it was September 2010. Nick Timiraos of the Wall Street Journal is here with this story. Nick, explain to us what exactly Case-Shiller said today and what's the significance of it.
Right, so Case-Shiller looks at home prices in 20 major metro areas, and they come up with this index. It showed that home prices were up versus a year ago for the first time, as you said, in 2 years. And really, if you look at where home prices have gone, throughout the crisis, they started falling in 2006. They fell every month for several years until 2010, when we had those homebuyer tax credits that were fueling a lot of sales. So we had 8 months of year-over-year increases in 2010, and then 20 months of continued declines up until June of this year, when we finally turned positive. And what's happening right now is you have more buyers chasing fewer homes that are on the market. And so when that happens, prices go up.
Yeah, it's interesting. Excuse me, you wrote a post last night ahead of the report talking about this. And now that you reference it, let's get into this a little bit. Yeah. How is the distressed housing market, how is that affecting the larger housing market right now?
Well, it's really important to look at the distressed share of sales at any given time, because as we know, banks and other distressed sellers, they want to sell right now, so they're going to take a lower price. So distressed sales usually trade at a discount somewhere around 20% for a comparable non-distressed home.
It's a big chunk.
When the share of distressed homes rises, prices fall, and you really see that in these indexes. I mean, if you plot those two lines, they're very tightly correlated. When non-distressed sales begin to rise, when the distressed share falls, prices can rise. So even during a period like right now, where the distressed share is still very high, 25% of all sales in May were some type of distressed sale. Even though that's very high, it's down from a year ago, and so prices are beginning to rise.
And down from 2 years ago, too. You can see 2 years ago it was almost 50%.
Right.
And I believe in your post you said historically it's about 5%.
Yeah, it's normally around 5%. So this is a sign that the housing market is still very fragile. If we didn't have these low mortgage interest rates that are bringing in a lot of normal buyers, if we didn't have the low prices that are bringing in investors that are aggressively scooping up these properties and converting them into rental homes, the yields are great right now, then we probably wouldn't see this. And we're already beginning to get some reports that investors are pulling out of some of these markets because prices are going up too quickly.
Wow.
If prices settle back down, hopefully investors will be there, and that's why a lot of economists think that even though home prices probably aren't going to rise very much from here, they probably have set a trough or a bottom, because you have that investor bid in the market if things get soft again.
And that in and of itself is a good thing. The prices aren't going down anymore. But, it's interesting, you talk about investors. Explain that to me a little bit. How much of this housing market now is being driven by investors as opposed to actual home buyers?
Well, it depends on the market, as with anything in housing. And so some of these places out west that were hard hit, in California and Arizona, you had a lot of foreclosures. They're very cheap, and so investors have been coming in. In Phoenix right now, a house where the monthly mortgage payment is $800 a month, you can rent for you can rent that same house and get $1,100 a month in rent. So that's a great deal for an investor, and we're beginning to see investors move into other markets where they think they can again, where prices have fallen enough, they can try to replicate that strategy.
Yeah. All right, Nick Timiraos, we have to leave it there. Thank you very much. So
Thanks,
you can see Nick's stuff in the paper online, Real-Time Economics. He writes for. You should write for our blog sometimes too, man. Give us a little love. All right. Thank you very much, Nick. Talk to you soon.